Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 8th of February, 2023, 6:25 p.m. Central Time. My gosh, time is going fast. You know, today, away from this, I went out to my lawn. I live right in the center of downtown Chicago. Well, the West Loop it's called, which is a hot, beautiful neighborhood. And I couldn't believe it. On some of my bushes actually have buds. I've never seen them February 8th coming out. So it is strange, real strange, but had to do the trimming. I love to do it. I have gardeners, of course, for the other stuff, but I love to go out there. It just breaks my day up. I get to think, and I don't think about the markets. And that's a point that I'm making. You can't spend your life as a trader, running a brokerage company, whatever, just staring at screens. You got to take breaks during the day to walk away from things. I was bothered today a little bit. I'm reading about used car prices. Not that I'm in the market for a used car, but they're going up again. So this is part and parcel because so many people are getting employed. They suddenly have money in their pocket. They'll need a car to get to work. I'm going to go. They're not buying new cars. They're too expensive, and the dealers aren't working with you. So they're back to the used cars. And as a group, they're moving up again. That's not deflationary. Got to think about that. And that's more of the problem that we're dealing with. Today, this afternoon, I did a long interview on Sky Business in Sydney and Melbourne, Australia. And as we're doing it, I brought up the battle. Don't fight the Fed. Never fight the tape. Which one do you go with? Because they're doing different things. The Fed is saying to you on one hand, we're going to keep raising rates. We're going to keep them up there. That's bearish. On the other hand, since the summer, each deep break in the market, you get the traders coming in and gobbling them up, saying that you got to handle the market from which way? The long side, because the Fed isn't going to stay there. They asked me a question, and I'd love to bring this to you. What would you do as an investor and a trader? And I said, that's the difference. You got to wear two different hats. As an investor, I'm buying companies on big breaks like a Tesla or an Apple, not just tech companies, a little bit of everything, and you put them away. That's what you do as an investor. I'm being hypothetical. As a trader, I don't give a damn. What I own today, I don't want to own a week from now or 2 weeks from now. It goes to my Bollinger Band, my window envelope. Something's going to happen there as a trader. So you have to make a decision, and you have to keep them separate. You got to be Mr. Hyde or Dr. Jekyll. Which one are you? And wear the hat separately. Can you be both? Jekyll and Hyde live together. You can live together. Just know which hat you're wearing. Okay. So as we look at the market, first thing I'm looking at is what's going on in energy. Gasoline prices, they're definitely getting a small bid, and that brings me to the point where my energy report, which is on the website, it's a video report, goes off my site tomorrow. So if you want to see it, this is your opportunity. Don't tell me, Ira, I missed it, I want to see it. You won't be able to see it, okay? It's one shot to see it. Comes off our website on Thursday. I cover with you the seasonal charts, the weekly charts. I cover the April gasoline, and then I carry into the summer months. I talk about what typically happens, what goes on with that. So if you're interested, that's what you want to take a good hard look at. How do you get it? Go to our website. It's under research. You can also, by the way, click up here at any point to do that. If you need help, just call my staff. They'll work with you, okay? So that's the way you get about that. And it's the last time we'll talk about it because it'll be off my website tomorrow. All right. So we look at the S&P, and again, there's nothing on this weekly chart that is bearish. This market is over the 18-week average. It's up. It's been coming up. It's down 0.33% for the week. It hasn't really moved. That's the way to look at it. You are getting distribution, though. You've come up, you peaked, and now if you think about it, for the last 5 days, you're just whipsawing back and forth as the market's digesting all this news. And as it digests it, it's going to tell us the story as to which way the next move is. For the time being, you've had a pattern of higher lows and higher highs. Can that change? Oh, yeah. If you take out the lows of today, Wednesday, right here. Remember, the last bar here is we're already into Thursday trade. That will give you lower highs and higher lows. That's your pause. If you take out on this formation, 40.98 and a quarter, you actually go into a downtrend. Where's the 18-day average of closes is the thing you have to ask. If that occurs, maybe you're going to make a run to the 40.71 level. The problem is, even if you drop, as long as you stay over the 18-day average, you have a bear market drop, bear move drop, let's call it, but the overall pattern is bullish because the bias is set by the relationship of price to the 18-day average. When you're over the 18-day average, you automatically have a bullish bias. What are you looking for? Reasons to be long. That doesn't mean there's not reasons to be out of longs, but you are not looking for a reason to be short. It's simple enough. Trading is not difficult. People make it difficult. They think you have to do all these crazy things. You don't. Where's the Bollinger Bands? They're here, okay? So the market's been hitting the black band and running into a big problem at it. Tries to get over it, it can't. But the trajectory has been higher, and what have we been saying? The trend is up. I've been saying it on the weekly, and we're saying it on the daily. Now, you just lost the embedded reading. Let me give you the other part of the puzzle. I pray that you took the Enhanced Bollinger Band course. This is the close of business on Wednesday. You lost the embedded reading. You're at 78.88, and the day before you were at 84. Both numbers were still over 80. So on the close today, I believe that the S&P traders liquidated out. That's the smart money move. Now, in order for them to want to come back in, both numbers have to tomorrow close over 80. Even with the market up nearly 5 points, you're dropping further. It doesn't bode well for it. If it stays this way, before you go up and make a new high, my prediction would be that I think the market's going to make a run for wherever the 18-day average is to neutralize itself, and that often momentum leads price, and that's what I think is going on right now. In the NASDAQ, did we get the same thing? So let's take a look. On the close today, the NASDAQ 79.46, not a close under 79, but right on the cusp. And here's the danger. You close near the day's low. When you reopen, you're going to put pressure. That's how the math works of the slow stochastic. It's going to drop. You'd have to shoot up dramatically right on the open for that not to occur. So then I go to the market and I say, okay, what's the next day's action? Well, it didn't shoot up dramatically. It is up 24 points. 0.2%. I wouldn't call that dramatic, and it's still losing the embedded reading. This market's acting bearish, and it's acting as though it's probably time to say bye-bye to some long positions in those markets. If you re-embed, we'll take another look at it, but that's what I'm seeing tonight. In the Dow, we haven't had a trend. We have been stuck in the upper and lower band, and literally every day hitting the 18-day average. You didn't hit it 2 days. That's about it. I don't know if you'll hit it now or not. Wow, that's a lot of sideways action. Then in the Russell, for my work, the Russell told me the other day, let's go to it together. Here's the Russell on Tuesday. Still embedded. Today, you lost the reading, 71. And you close near today's lows. You're going to drop further right off the bat. And that's what you're doing even with the market up. It's how the math works of it. And the odds of getting these numbers both over 80, small to none. Doesn't mean it can't happen. You need a monster day for it to embed. That means the odds strongly favor price and the 18-day average coming together before you get over that number. It's all a game of probabilities. Do I know? I don't know. I know the probabilities. I know that when we're bullish, this is the time not to be bullish in that. That's what it tells me. In the bond market and the note market, all you're doing is traveling from upper to lower Bollinger Bands. This is like an impossible situation to try to call. In order to catch that move, you had to throw a dart. Boom. At the wall, you decided that was the bearish number and the market fell. Well, same theory. You're at the lower band. Why not throw the dart and it's going to go back up? I don't know. It's not a trend. So I don't see anything to do there. Let's go to the next chart. 10-year notes, identical. And that's part of what the market's dealing with. It's heard all the talk from the Fed and other central bankers. It's looking at a lot of data. The jobs report screwed everything up. Everybody's coming out trying to figure out what to do about these jobs numbers, including the interview that we just saw yesterday, was it, with Fed Chair Powell? I mean, think of this, was just happened, and it's his second speech within a week. Was it Tuesday that he spoke? I think it was Tuesday. Days are flying on me like mad. We're Wednesday, but we're in Thursday trade. That's where it gets all confusing for you. But that's what's going on. Got to be careful here, okay? And now all the different little Fed members, and I don't mean that in a negative way, but there's 20 of these guys, and they're running around the country, and they're telling you what they think in the market. I haven't seen any saying that we're going down in interest rates, not one so far. But the market is saying they'll never stay the course. But suddenly, if you're looking at the swaps market, you go to the Fed Watch page, all of a sudden, there's some interest in 6% interest rate. Go look. In the dollar index, well, if interest rates are going up, it's hard to be bearish the dollar. The dollar's part of the product of it is how is it relative to other countries' interest rates. And right now, I think we're going up again in March. We'll see what the data looks like after that, what the Fed says. And here's the beauty of March. We get dot plots again. So we have the last ones in December, and now we're going to get them all again. That's going to open up a store. But on that story we're going to get, it's March 22nd. This is February 8th. You can't count on that. You got to trade the charts. Got it? Got to know your time frames, where you're at. Do your pre-planning. That's very important, and away you go. You got to lay things out. In the euro, high to low, and it's a mirror of the dollar. It's just a flip-flop of it. That's all it is. In the British pound, okay, we got down to the 200-day average in the Bollinger Band, and you're not embedded. Take the enhanced Bollinger Band course. You learn what that does. Crude oil. We're still staying very strong with the differential of Brent staying well bid over U.S., and look at how the market's no longer in a downtrend. You got up high enough now. You went right to the 100 and 200-day averages, and you stopped magically. Do I not teach you that's what these markets do? What did I tell you? If you get up to these bands and you get a correction, you'll fall and fight a battle often at the 18-day average of closes. You don't have to believe me. Go back and read your charts. Does it happen every time? Nothing happens all the time. These are generalities, but strong ones. And now you're fighting. What's the next move going to be? Same in WTI. No difference. You're out of your bear trend. You now have a higher high and a lower low. Gasoline, and I have this labeled right, still in a downtrend. It's going to fight a battle at the 200 to the 18-day average of closes, in my opinion. I don't think it's ready to say it's through on the downside yet, but I don't think it's going much lower. Got it? I think you've made your break, and now I think it's going to spin here and create a formation that we look at. And nat gas, I just don't see anything bullish. The problem with nat gas is if you take my course, there's a finite number you sell into it on this break before you get a correction. That's my only problem in this market. It's easier to trade now, nat gas in the ETF than it is in the futures because of that. And take the course, you will understand. I lay it all out there. So how do you get to the course and everything? IraEpstein.com. How do you get to the gasoline report? IraEpstein.com under the word research. You can always click here if you just want to go to the gasoline report, and the gasoline report will be off sometime during the day tomorrow on our website. It just disappears. I'm Ira. I'm going to just disappear right now, but I'll magically reappear first thing in the morning. Take care.